had a question the other day on the podcast from someone who was asking me, when you go to buy a vehicle, do you tell the dealer up front you're paying cash? Do you get a better price? And I was explaining, no, you get a worse price if you disclose up front that you're paying cash for the vehicle, because the dealers make so much money writing the vehicle loans. But I wanted to explain the way this whole thing plays out and why I always talk about you arranging your financing in advance with a credit union when you're buying a vehicle. Vehicle loans are very expensive now because the average vehicle is so expensive. I mean, the average vehicle in the United States used to be, 5 years ago, I think it was, the average vehicle was just over $30,000, new vehicle. Today, the average new vehicle is somewhere around $47,000. A lot of it is because people are optioning them up, and the manufacturers are delivering vehicles that are very, very expensive, so that when you go to the lot, when they have one, it's going to be one that is fully optioned, fancier trims, all that. So this is a problem for your wallet, because then it multiplies out an impact on you as you're paying interest for that vehicle loan over the years. Now, my answer has not changed about how long a vehicle loan should be to protect your wallet. It's 42 months. And people look at me like I'm out of my mind. But 42 months is the max you can finance a vehicle to remain in a safe situation with that loan versus the remaining value of the vehicle. As you go out from 42, and many people are financing for 72 or 84 months, you're upside down through the life of that loan, meaning you owe more on it than what the vehicle's worth. And there are several financial Armageddons that can happen when you are upside down like that. So 42 months caps the risk, pretty much eliminates it. But as a practical matter, very few people will follow my advice on the 42. So then you're carrying a longer loan, let's say a 60-month loan, very common. And so the interest rate on that loan becomes a real factor in how much money you're having to lay out every month for it. And the gap between credit unions and banks has gotten larger and larger, and depending on whose measurement you believe, used to be about 1.5 points higher interest rate for a loan from a bank versus a credit union. Now that gap has moved to about 1.75%. So that is a huge difference over the life of a loan, which is why even if you're not a member of a credit union today, when you're going to buy a vehicle, join a credit union first, pre-qualify for a loan. They'll tell you, based on your credit score and all the rest, how much of a price vehicle they will finance for you, and use that as your absolute ceiling. Because if the credit union is telling you there's danger beyond borrowing X number of dollars, listen to them. Listen to them. I don't care how much new car fever you have, whether it's a new to you used car or a brand new vehicle. Don't let new car fever put you into a bind doing something financially that will harm you for years to come. Now, you got the credit union loans, the bank loans, and then you have the car dealer originated loans. If you're pre-qualified for the credit union loan, then you're a free agent. Let's say at the dealership, they have a manufacturer's subsidized loan rate that is ultra low and better even than the credit union rate. Then fine, it's a win-win. You let the car dealer finance the vehicle, and you get that special rate. They get their kickback from the financing arm of the manufacturer. You get a better rate. Everybody goes home happy. But it's only a small number of situations, and almost never on a used product, that your money is going to be much better than what the bank has, because you did it at a credit union, or what the dealer is going to offer you. The dealer loan will usually be quite a bit higher in interest rate than what the bank is, which is already much higher than what the credit union is. So you do this stuff in the right order. The money always comes first. And then again, when you're at the dealer, don't say to them not a word about how you're going to pay for the vehicle, because they will discriminate against you on the price of the vehicle if you have your mind made up front, and they know up front you're not going to finance with them. They're going to charge you more to buy that vehicle, or they may even refuse to sell it to you if it's one that's in short inventory. So that is after you have negotiated the deal on the vehicle.